This is certainly a once in a generation shift. People should be aware of it. They should be paying attention because it will affect them, no matter if they're 25 or 65. The first thing I want to talk about is this big shift that's going on today. The second thing is follow the money. Where is money being put into? And then the third is, where's it leaving? Where is it going out of? I want to look at all of this, okay? But if you stick with me until the end, we're going to talk about the robots that are coming for your jobs. Let's begin. Let's take a moment to understand the situation, okay? It's so important, so key right now. What the Federal Reserve is doing. They are tightening. They are going into a mode in which they are printing less money and then, of course, increasing interest rates. As I will show you in this video, many do believe that they will not only increase interest rates a few times this year, they will do so many times. And you could look back in history what has happened. There are cycles on the up and the down. The boom-bust cycle is in fact created by the Federal Reserve intentionally. This is not as if they're trying to prevent a crisis. Oh no, it's a much different situation. Look, this is the first thing I want to mention. Higher interest rates, it's just simple fact, creates less spending. People will spend less money because, of course, all of those things, the credit cards, the mortgages, the car payments, everything else becomes more expensive. So there's less money going to be spent because those individuals have only so much spending that they can do in a given month, in a given year. That, of course, slows down the economy as a whole. The next thing is that most people today are overexposed and over-leveraged. And this goes with their investments, but also in other aspects as well. They're using margin more than ever before. They are using all kinds of leverage products that they can, and they do not have the knowledge to back that up. If you're an astute investor, if you're paying attention every single day, every minute, well, then that's a different story. But for so many people, they are just going pedal to the metal. That means that their 401ks, their retirement accounts are overexposed to any potential shock. And that, my friends, is an unfortunate thing when you see this once in a generation shift. So we're going to look at this right now. Let's take a look here. Americans prioritize the economy and the cost of living in 2022. There are a few things in here, but let's say the current situation, okay, that current situation has looked like from 21 to 22 come down significantly, okay, from 53% down to 37%. What are people really concerned about? The economy. The economy is a big concern. 68, unchanged from last year. If you look at this, personal finances and the cost of living has increased as well, doubling from last year to this year. Of course, that's an issue. So we're going to look at this. Jamie Dimon, okay, the top dog of JP Morgan, the insider. Oh, yes. JP, I mean, what are they not involved in? That's not the topic for this video, though. Sees the best economic growth in decades, and somehow, at the same time, more than 4 Fed hikes this year. More than 4. What's that, 5? Is that 6? How are they going to accomplish that? I don't know. I mean, 4 is a lot. We will see what happens. But if you look at what goes on historically, you can't say, no, they're not going to do that. Look at what happens historically. When they do increase rates, especially when inflation is rather high, they do it faster than what you would think. Remember before, just a few months ago, they were saying that they would increase interest rates in 2024. Then it was 23, then it was 22, but at the end of the year, now not only are they talking about the summer, but it's looking likely that it's going to come in March, 2 months away. But literally a few months ago, it was literally years away. Higher interest rates upset the stock market as hot inflation tests the Fed. So I don't know when you're watching this, but in a couple days from the recording, you're going to get some information that comes out. Not only is Jerome Powell going to speak, and hopefully for the markets, he's going to walk back on some of those statements that he made, but you're going to get some inflation information. And of course, the higher that inflation rate data comes out at, the more it's going to make the market suggest that, you know what, they're going to be increasing rates faster than what they initially thought. That's the expectation. We will see what happens. Now, I want to look at what I call follow the money. You've heard this before, but let's take a look here from Reuters. Oil markets attracted a new wave of interest from investors at the end of 2021 and the start of 2022. And of course, the disruption that could be experienced economically has kind of been, let's say, muted for the time being. Oh, we don't have to worry anymore. This is not going to be a concern. So that is good for the economy, more demand for oil, and so on. Hedge funds and other money managers purchased the equivalent of 31 million barrels in the 6 most important petroleum-related futures and options contracts in the week to January 4th. What does that mean? Lots of money from the investment community going into oil right now. Okay, they purchased quite a bit. It just shows you there are charts associated with it if you want to check that out. Basically, they've gone from bearish to bullish on oil. At the same time, we've seen the price of oil going higher. Global fund flows. Here you can see, and by the way, I don't know why other channels and why don't they show, this is so important. Anyway, this comes from Goldman Sachs. Equities, you can see what has happened here, kind of out of favor during this interest rate. While interest rates were getting higher, less money was being pumped into equities, okay? And then what happened? Interest rates started to decline. This is 2020, by the way, right here. You had this period in which more money being dumped in. And what happened? Hey, not only was it from the share buybacks, but also investors dumping their money in. Bonds throughout the period saw major inflows, even when there were negative rate bonds, are attractive somehow. I don't know. Anyway, and cash sort of fluctuating around there. I think it's important to note that if we are heading into an increasing interest rate environment, then what looks attractive? Cash? Is it attractive, or is it, bonds? We have to look at that historically, and that showed you what happened previously. We'll see what happens. Now take a look at this. The video before this one, if I have time, the video before this one would just be highlighting this, but this is important. 2017, what was the best performer? MSCI China. 2018, what was the worst performer? MSCI China. 2019, what was one of the best? MSCI China. 2020, again, 2 years in a row, China. 2021, a bad year for China. Is 2022 going to be the reversal? It's a contrarian play, is it not? Wow. Think about this. Look at this. Stop. You can stop the video, you can pause it, you can zoom in, or you can go to the links in the description. If you do appreciate the work that I do, giving all the links, giving all the sources, just support the channel by giving a thumbs up. That's all I ask. Take a look. Is this, I think I have it right here. Yeah, this is the one. Is this the play for 2022? I should say the contrarian play for 2022. China property developers versus US home builders. Throughout 2020 into 2021, Evergrande, Shimao, all of them, every single one, in fact, were just getting smashed. They were getting hammered in China. Is it now the time to take that risky bet? Well, we'll see if a major bailout starts to happen. That's a difficult one. You take what you want from that. This points to an ongoing price pressure. You could see the record wealth driving more spending. and more early retirement. Of course, you're going to see inflation. All of these charts here, just looking at what happens when the Federal Reserve takes those actions, how this is going to affect people. I don't know. It's showing you the participation rate in the middle there. And that's key, because when you look at the unemployment rate, it's not a good indicator. We got to have people working. We have to have people earning income, and then that income being spent into the economy. Doesn't matter what country you're in. Is that happening now? Not really. We're really reliant on stimulus. Look at what's going on with crypto. Obviously, the price of Bitcoin getting smashed. We saw it going from, I believe it was 68,000 down to approximately 40,000, dipping just below for a brief moment under 40,000. But the amount of money that's been flowing in, crypto blockchain VC deals, how much venture capital cash is out there. I mean, there is a lot being spent. Look at that. It looks like approximately $11 billion in the fourth quarter of 2021. Huge. This is massive. So we will see what happens, going into the next year, but it looks like more and more and more cash being thrown in. Now, with the recent change in the price, we'll see. Now, where is the money leaving? Well, first, I wanted to start with this. Because with an increasing interest rate environment, there's got to be a winner. And I've covered this many times before. Maybe you're a new viewer. You'll see this. That blue line there, that's the KBW Bank Index versus the S&P 500. And let me just say it like this. If we believe that interest rates are going to rise, the banks are going to be, at least in a relative sense, good performers. Look at the S&P 500. I'm looking at the chart over my shoulder over here. It's basically, where is that? Since November. We haven't moved since November, yet the banks have been able to perform well. Unprofitable tech stocks have been smashed since their peak, down 48%. And then you have this related to ARK. Cathie Wood, hailed as the greatest investor of all time just a little while ago. Now things have changed. The spike in insider sales, this is related to the stocks that ARK owns, okay? So the spike in insider sales and the lack of buying interest is worrying. The median ARK holding has lost 55% since its 52-week high. If insiders are not buying now, why should investors? Because that's the signal, right? You want to be able to hear that. You want to know, oh, the insiders are buying, I'll buy too. But that isn't happening. Of course, you have a big skew because of Elon Musk and others, but still, it's still present. All right, you stayed until the end. Thank you for doing so. If I could give you a thumbs up, I would. I'll give you one right now. But take a look at this. Can a self-driving 40-ton truck be safe? Developers say yes. Now, what are they doing here? Now, I know you might be thinking to yourself, this isn't safe, this is crazy, this is dangerous. Maybe that actually is the case, but this is what's going on. Supply chain woes spotlight promise and the peril of autonomous rigs. Automated truck pilots abound despite safety and labor obstacles. They're going for your jobs. Now, maybe you might say, I don't want to be a trucker, or there's not a good job, or it's not glamorous and all that. They're going for the jobs. South Bay Hotel solves staffing shortages with robot room service. So now you can have one guy staying in the kitchen, for instance. He puts the plate inside of this robot, pushes the room number, and there you go. No need to have a human being deliver the food to you. No worries about somebody sneezing on it or the guy scratching his face and all the dead skin cells appearing in there. It's inside this robot. It's all good, right? Well, there's two sides to that story, of course. What do you think? Do you think that robots will replace these type of jobs? We need to discuss this. Put it in the comments below. I do appreciate that when you do so. Thank you for supporting the channel by clicking that like button. It's right down there. Wait a minute. Hold on. Have you noticed that a lot of people have been unsubscribed from this channel? I bet you didn't even know. Every day I check the subscribers, and there are many days in which the subscribers actually decline. And then I go into the comment section and I read it every single day. I kid you not. Oh, wait a minute. I've been watching your videos for 3 years and I was unsubscribed. This happens every day. So check your subscriptions. And if you haven't seen this video yet, you definitely want to check it out. Click it and I'll see you there.